the godfather of impact investing. His new book, Impact: Reshaping Capitalism and Driving Real Change, is out now. Thanks so much for joining us, Sir Ronald. Good to see you.
Good to see you, Wilfred.
Huge flows of money have gone into impact investing and in ESG investing in recent years. How much more of that is there to come? And has it made a big difference? Is it being correctly monitored and leading companies to really change their behavior?
Well, the era of just making money and not bothering with all the damage you cause around you is over, Wilfred. If we look at the data on 1,800 companies, which Harvard Business School has put on its website, measuring their environmental damage, we can already see a correlation between companies that deliver more damage and are worth less. So impact has become price-sensitive information now, and it's just going to change the world now.
What would you say to people who criticize the idea of ESG as its own asset class, that suggests things like the G, the governance, is essentially investing in companies that abide by the law, for example, i.e. this is something that, in fact, all investors start to think about, as opposed to it really being an asset class in its own right?
I think the original thinking that this would be an asset class is behind us now, Wilfred. We see impact affecting every asset class: public securities, bonds, private equity, venture capital, infrastructure. Every sector is beginning to focus on optimizing risk, return, and impact. And impact transparency is on the way for companies. We can already see on the Harvard data that you can measure the impact a company has through its employment, through its operations, and through its products.
Do you think this is already priced into certain companies? We've been talking today, Sir Ronald, about the likes of Exxon and Chevron, who reported earlier today. Maybe they don't have very good environmental records compared to some other companies, but they're incredibly cheap as well. How should investors think about that balance?
I think they're cheap at the time when renewable energy companies have become expensive, Wilfred. Investors are beginning to realize that the negative impact of these companies, so Exxon delivers $39 billion worth of environmental damage a year from its operations alone. And so investors have become aware that this is a risk for the future. It's a risk in terms of government regulation, potential taxation, talent leaving them, and customers leaving them. And so investors are running away from them.
Sir Ronald, always a pleasure to catch up. Thanks so much for joining us.
Pleasure to be with you.
Shepard Smith here. Thanks for watching CNBC on YouTube.